Lovely. Okay. Got a couple more people joining in right now. Okay. Hello, everyone, and welcome to our November webinar. We've got Greg with us today to go through a review of protection policies. And as always, he will deliver his presentation, and then we will go through a question and answer section at the end. So if anyone does have any questions throughout the presentation, just pop them over in the Q&A section on the right here, and we can go through them at the end. There will also be a small survey at the end of the presentation. So if anyone does have just 30 seconds, just leave that feedback for us. Obviously, it would be greatly appreciated. And we've also included a question just to see if there's anything that anyone would like to have included in our webinar series, then please leave your suggestions in there. Otherwise, Greg, I will leave it with you.
Good. Thank you, Jess. Welcome, everyone. Good to see a few people joining. It's a minute past the hour, so we'll sort of just got a few attendees. So yeah, no doubt a few more will be joining in shortly. But yeah, this presentation is just on protection policies, a comprehensive review. We're going to literally be talking about the key policies from both an individual's point of view and also a business protection point of view throughout the course of the webinar, as I buy a little time for a few more to join. So yeah, the session is planned to not take longer than 30 minutes. Not take longer than 30 minutes, and I'm looking forward to a few questions at the end of the presentation. So yeah, as Jess mentioned, make use of that Q&A function. Protection policies. Sure. So what are there, and do we have enough? So in this webinar, we're going to just explore that landscape of financial protection in the UK. So that's the aim of the session. Recent changes, key policies, what are the benefits that they offer, and then just to gain a bit of insights into a few case studies, and then also putting in a few tailored protection solutions in front of you for that financial well-being that we are all after, for sure. Great. So the agenda in the webinar. So we're going to just discuss the protection landscape. We're going to discuss key elements of protection policies, understanding the importance of protection, risk management, tailored solutions, and then we are also going to discuss business protection at the end of the webinar. And as mentioned again, Q&A will be at the end of the session as well. Good. Okay, so the changing landscape. So the term assurance market, I mean, it's valued at over £500 million in 2022, and it's expected to grow at about 1% during the period of 2022 to 2027. So it is a big industry, and the number of contracts will also increase over the same period. But there is a decline in contracts also expected for mortgage-related terms in 2023, as I'm sure you can imagine. This will be due to high interest rates and the cost of living crisis. Obviously, that has now deterred individuals from taking out mortgages, which is impacting mortgage-related term take-up. If you're not taking out a mortgage, you don't need to protect against it, is essentially what is happening here. The Bank of England's repeated interest rate hikes have also pushed more individuals away from purchasing property due to this growing cost of mortgages. The key companies in the UK protection insurance, term assurance markets are Legal & General, Aviva, AIG, Royal London, Vitality, and Zurich, amongst a whole bunch of others. And in 2022, L&G led the market with the highest number of term assurance contracts. L&G also remains the largest player in the term assurance market, with a market share of 29.6% in 2022. It is that changing landscape that we do look at what is called the protection gap. The protection gap is something just from what UK households have got protection for, and what potentially might arise if financial strife or events were to happen, which could put a financial burden on that household, is what is called the protection gap. So more than 2/3 of employees are not receiving benefits such as critical illness, income protection, as a paid for benefit, which also just speaks to this changing landscape that we are experiencing right now. Great. So covering your assets. Now, protection policies, often referred to as insurance policies, are financial instruments designed to provide individuals and their families with financial security in the face of unforeseen events or risks. Obviously, if we all had crystal balls, we would need things like protection, or we would, because we'd be able to predict when excuse me, we'd be able to predict when that event were to happen. So unfortunately, we don't. So we're going to need to put a instrument in place for that event to arise. So the fundamental concept of protection policies revolves around mitigating the potential financial impact of specific events such as illness, disability, death, or other adverse circumstances. These policies offer a way for individuals to manage and transfer risk, ensuring that they and their loved ones are financially protected during challenging times. You don't want something to happen and you are needing to well, basically you don't have the funds to cover against one of those eventualities happening, which is definitely why we are going to be discussing just that covering of your assets, which are important. Key protection policies, I mean, from an individual's point of view, life insurance, critical illness cover, income protection, and then other protection policies that we don't necessarily do too much of, but accident insurance, payment protection insurance, and private medical insurance. We're going to focus on the key protection policies being the first three, but also equally happy to engage with you privately on the other three if you are in need of some further details in that regard. Okay, so life insurance or term assurance or whole of life. So we're going to go through sort of the definition of these products, the key elements, and essentially the purpose of these products. So the definition of life insurance is a contractual agreement between an individual, the policyholder, and an insurance company. In exchange for regular premium payments, the insurance company agrees to provide a specified sum of money to a designated beneficiary upon the death of that insured person. It can be a crucial component of a comprehensive financial plan. That's a theme that we're going to be discussing throughout the session, which offers financial protection and peace of mind. So the key elements of life insurance: policyholder, that's the individual who purchases the life insurance policy and pays the premiums. Then you've got the insured person, whose life is covered by the insurance policy. In most cases, the policyholder and the insured person are the same, but they can be different individuals. A spouse purchasing life insurance on the life insured of their spouse, for instance, and also beneficiaries. So the individuals or entities designated by the policyholder to receive the death benefit in the event of the insured person's death. Premiums are obviously a very key element. Regular payments made by the policyholder to the insurance company to keep the policy in force. Obviously, if the premiums are not being paid, there is no policy to basically pay out at the end of or if the insured person were to pass. And most notably, a key element here is the death benefit. That's the amount of money the insurance company pays to the beneficiaries upon the death of the insured person, which is the primary purpose of the contract. And speaking of the purpose of life insurance, there's quite a few numerous purposes that you can put in place here. There are 7 of them. Firstly, being the financial protection for loved ones. So that's the primary purpose of life insurance, is to provide that protection to dependents and beneficiaries. The death benefit can help replace the income of the deceased, cover living expenses, and maintain the financial well-being of surviving family members. The second purpose is debt repayment. Life insurance proceeds can be used to pay off outstanding debts, such as mortgages. This ensures that the financial obligations of the deceased do not become a burden on the surviving family. Estate planning. It can play a crucial role in estate planning, where it provides a source of liquidity to cover estate taxes and other expenses, which allow for a smoother transfer of assets to their beneficiaries, to their heirs. Key there is that inheritance tax is obviously sitting still at 40% on anything over your nil rate bands. So that is quite a substantial inheritance tax bill that can be mitigated against. Another key purpose is education funding, where you can use the proceeds from a life insurance to fund educational expenses for children or other dependents. The death benefit can ensure that funds are available to cover tuition and other educational costs. Next is business succession planning, and this is in the context of business ownership. Life insurance can be used to facilitate a smooth transition of ownership in the event of death of a business owner. The proceeds can help buy out the deceased owner's share and ensure the continuity of the business, which is quite a key thing. Last two, charitable giving. Individuals with philanthropic goals may use life insurance to provide a substantial donation to charity or non-profit organization upon their death. And lastly, and this is a big one, peace of mind. You'll see that trend throughout the session. Just the knowing that loved ones are financially protected can provide that peace of mind to the policyholder, which can alleviate concerns about the financial impact of one's death on a family member. Obviously, you don't want to leave your family in the lurch in the event of your passing, which that peace of mind obviously does come into it for sure. It's important, though, that you carefully assess your financial needs and your beneficiaries' financial needs when considering life insurance. The type and amount of coverage needed can vary based on factors such as age, income, family size, and financial obligations. Lastly, here is the taxation. The payout of life insurance is normally tax-free. However, if the plan is not set up in trust, you should remember that any benefits paid are likely to form part of the deceased estates unless the money is being paid to charity. So designating life insurance proceeds to trust just means that the trust can receive that payout and not any individual, which will inflate their personal estate. Critical illness cover. This is definitely a product that is underused in the UK market. It's a type of insurance that provides a lump sum payment if the insured person is diagnosed with a specified critical illness or medical condition during the term of the policy. Typically, these policies run to 65. So from now till then, while you are still working, that is that term of the policy. The purpose of critical illness cover is to offer financial protection by providing funds to cover medical expenses, lifestyle changes, or other financial challenges that may arise due to serious illness. Key elements of critical illness cover. Covered conditions. This is a very important one. Critical illness covers policies typically specify a list of covered conditions, which may include serious illnesses such as cancer, heart attacks, stroke, organ failure, and others. And most notably, the conditions may vary between providers. So it's very important that you are aware of the covered conditions within your critical illness cover. Then it's a lump sum payment. So if the insured person is diagnosed with a covered critical illness, the insurance company pays out a lump sum amount to the policyholder, and this lump sum is not tied to any specific medical expenses and can be used at the policyholder's discretion. We're going to discuss that in a short while, but it is not tied to the specific medical expense. Can be paid out and used at the discretion of the policyholder. The next key element here is survivorship benefit. So unlike life insurance, critical illness cover provides a benefit while the insured person is still alive. The lump sum is paid upon the diagnosis of a covered critical illness, regardless of whether the insured person survives the illness. Next key element is premiums. Obviously, policyholders pay regular premiums to the insurance company to maintain the critical illness cover. The amount of premiums will depend on factors like age, health, and level of coverage. Last thing here, exclusions and waiting periods. So these policies often have exclusions for pre-existing conditions, and there may be waiting periods before coverage becomes effective for certain illnesses. It's essential for policyholders to understand these terms and conditions at the outset. Purpose of critical illness cover, it's financial support during illness. That it's going to be a challenging time for the insured. So this lump sum payment can be used to cover medical expenses, treatment costs, and other related bills. Obviously, a forum for a different time, but the NHS is under large stresses at the moment. So just having this financial support during this time would be key. Maintaining the lifestyle. So the funds from critical illness cover can also help individuals and their families maintain their lifestyle during a critical illness. That could include covering of mortgage payments, utility bills, and other ongoing living expenses. Next benefit here is just recovery assistance. That lump sum can be used to finance rehabilitation, lifestyle adjustments, or modifications to the home to accommodate the needs of the individual recovering from the critical illness. Debt payments, just like in life insurance, can be used to repay outstanding debt, like mortgages, as well as supplementing lost income. If you are diagnosed with a critical illness, the lump sum from that critical illness cover can supplement lost income during this time, providing that financial cushion for you and your family. Choice and flexibility. So essentially, the policyholder has the flexibility to use the lump sum payment as needed, whether for medical treatments, alternative therapies, or other expenses deemed necessary during the illness. Last key benefit here, peace of mind. I think this will be for each of the products that we do discuss, is just that peace of mind, knowing that there is protection in place. Just like the taxation treatment with life insurance, critical illness payouts are designed to cover medical expenses and not considered as taxable income, not an earned income. So this means that if you receive a critical illness payout from your insurance provider, you will not be required to pay income tax on the amount received. Okay, going to the next slide here. Income protection. One of the three key policies. Just literally as it says on the box here, income protection, where you are taking out an insurance policy designed to replace a portion of an individual's income if they are unable to work due to illness, injury, or disability. This form of coverage provides a regular stream of income, typically a percentage of the insured person's salary during the period of incapacity. Most notably here, you can't take out an income protection to on 100% of your income. There are limits involved, depending on the provider. Around 60% is the limit to your current income that you are able to take this policy out against. The key elements of income protection policy: you need the policyholder who takes out the income protection policy and pays the premium, an insured person whose ability to work is covered by the insurance policy, again, largely or more often than not going to be the same person, premiums, regular payments made by the policyholder to the insurance company to maintain the coverage, benefit period. This is the duration for which the policy will pay benefits. This period can vary, and policies may offer short-term or long-term coverage. There are multitude of different options when it comes to the benefit period. You can take a full income protection policy that can pay out to an age in the future, be it 65, for instance, or there are low-cost options where the benefit can be paid for, say, a maximum of 2 years. And those policies are, from a premium point of view, are a lot more affordable. The waiting period or elimination period or deferral period. So this is the initial period after the onset of an illness or disability during which no benefits are payable. The policyholder must be unable to work for a specified time before benefits commence. I'll give you an example. If your company has sick pay benefits of full pay up to 6 months, which I've seen a couple of my clients have, then we don't need to put a income protection policy to start on the first day of your diagnosis of your illness or disability. You can wait for a 6-month deferral period before that income kicks in, which means that you've got essentially 6 months worth of a waiting period which decreases the premiums or the amount of premiums that you'll pay on this policy. It's going to be slightly cheaper. So deferral periods could be 4 weeks, 8 weeks, 12 weeks, can go up to 2 years, depending on the type of protection you want to put in place. Now, the key element here is the definition of the disability. It's the criterial definition used by the insurance policy to determine when the insured person is considered disabled and eligible for benefits. And the last key element is obviously the monthly benefit. That's the amount paid to the insured person on a regular basis during the benefit period. Purpose of income protection cover: replace lost income, maintain financial stability, covering living expenses, to facilitate recovery. These are all very good things to put in place when you are unable to work. Obviously, having that safety net is very important when it comes to an income protection policy, as life does move on and bills still need to be paid. Customization, I touched on this already, but policies can often be customized to suit individual needs. So benefit amounts, waiting periods, benefit periods can be based on your preferences and financial situation. Peace of mind. Having that financial safety net in place in the event of incapacity provides that peace of mind for you and your dependents, for sure. Taxation-wise, benefits received from an income protection policy are usually tax-free. This includes any regular payments or lump sum benefits paid out due to incapacity. Okay. Tailored solutions. So this is just the importance of customization. This concept is in the context of protection policies, refers to the customization and personalization of insurance plans to meet your specific needs and circumstances of the individual policyholder. So instead of adopting a one-size-fits-all approach, insurance providers offer flexibility in designing coverage allowing individuals to select features and options that align with their unique requirements. So customization of coverage is possible and very important. Things like fracture cover can be written into a policy, or waiver of premiums can be written into a policy. And these are all going to be down on what you, the individual, are in need of. Choice of policy types. Insurance providers often offer a range of policy types within a particular category. I've touched on the income protection differences between low-cost income protection policies versus the full approach or the full policy. And these solutions allow individuals to choose the specific type of policy that best suits their needs. Adjustable premiums. Tailored solutions may include options for adjusting premium payments based on changing financial circumstances. So you might have the flexibility to increase or decrease coverage, or adjust the premium payment frequency for those tailored solutions. We're going to go to the next slide, which will be just talking a few case studies. I've got 3 of them. So this is for young families. So John and Sarah, young couple with 2 kids, want life insurance that not only provides financial protection for their family in case of death, but also offers flexibility. Offers flexibility as their needs evolve. So what tailored solution would we put in place? We'd have a term life insurance where John and Sarah opt for term life insurance with 20-year policy term. This will align with the period during which their children will be financially dependent. Convertible option. This policy would include a convertible option, allowing them to convert to a permanent life insurance policy later if their needs change. Additional riders. These are things that can be added to the policy. Things like critical illness cover, things like income protection, family income protection, can be added, providing those benefits during the lifetime of that cover, resulting in John and Sarah having their life insurance to their current family needs while keeping their options open for the future. That's looking at young families. You put in a mortgage in there. That can be done on a decreasing term, putting in obviously investing through things like junior ISAs for their kids, for instance. I mean, all of these things really do intersect with each other from a tailored solution plan. Second case study, flexible income protection for a self-employed professional. So over here, background, Emma, a self-employed consultant, relies on her income for business success. She's looking for an income protection that suits her entrepreneurial lifestyle. Tailored solution, own occupation coverage. So she would select a income protection policy that offers own occupation coverage, which will pay benefits if she's unable to perform her specific professional role. Short deferral period. I touched on the deferral period a bit earlier. If she's self-employed, means that she has to pay herself any type of benefits. So she can opt for a short deferral period, which, given the variable nature of her income, will be paramount to cover immediate financial needs. Adjustable premiums. This policy allows Emma to adjust payments based on her business income fluctuations, resulting in Emma having that tailored income protection to the unique challenges of being self-employed. As I said, you don't have those sick pay benefits of working for a company. It means that you will have to pay yourself in the event that you are self-employed. Case study number 3. This is looking at comprehensive protection for high net worth individuals. So we've got David and Lisa here, high net worth couple, concerned about preserving their wealth for future generations. So they want that protection to integrate with their overall financial planning. Tailored solutions here, you'd have permanent life insurance or whole of life insurance. which choose a permanent insurance policy to provide lifelong coverage. So that coverage won't end at 65, for instance, like a term product would. It would literally end at the point of your passing. Estate planning integration, this is massive. This is where we would work with David and Nisa to structure the policy within their estate plan, leveraging the death benefit to cover potential estate taxes. 40% is that amount over your nil rate band, and if you have a main residence, then that's a further £175,000. So as a couple, married couple, you'll potentially have £1 million worth that would be shielded from inheritance tax. But anything over and above that, it will have a 40% IHT bill attached to it. And this ultimately forms part of that wealth transfer strategy. The policy is part of a broader strategy to transfer that as tax efficiently to your beneficiaries and your heirs throughout the rest of your lifetime and your bloodline. So that results a comprehensive protection strategy that aligns with their high net worth status and estate planning goals, providing that legacy, that generational wealth, which is paramount to many clients. Okay, so the benefits of protection policies, again, financial security, peace of mind, and support during challenging times. Those are just three paramount benefits. There are a few other benefits, as we know, but just having those three front of mind when it comes to the reasons why you take protection policies out is key, that those three are the stated benefits throughout the duration of those policies. I'll touch on business protection. So overview of key business protection policies. You've got key person insurance, shareholder protection insurance, business loan protection, and relevant life insurance. So I'll touch on a few of those. Key person, also known as key man or key person or key woman, is a policy that provides a financial safety net for business in the event of the death or critical illness of a key person within the organization. And this is someone who typically has the skills, knowledge, or leadership that is crucial to the company's successes. The purpose of key person insurance is to help the business recover from financial losses, recruit and train a replacement, and reassure stakeholders during a challenging transition period. You've got shareholder protection insurance, which is designed to protect a business in the event of the death or critical illness of one of its shareholders, provides a financial cushion and a framework for the transfer of shares, ensuring that smooth transition of ownership. The purpose helps surviving shareholders retain control of the business, provides funds to buy out the deceased shareholders' interest, and avoids conflicts among remaining shareholders. Business loan protection. It's a policy that safeguards a business against the financial impact of the death or critical illness of a key person responsible for a business loan. So it's ensuring that outstanding loan will be repaid, also reducing the risk of financial instability for the business. Purpose, literally a source of funds to repay business loans, which is obviously very, very important. Last policy that we do advise on is relevant life insurance. So that's a tax-efficient life insurance policy taken out by employers on behalf of their employees. So typically done for key personnel or directors. It provides a lump sum payment to the employee's family in the event of death or terminal illness. The purpose of this offers a tax-efficient way for businesses to provide life insurance as an employee benefit, basically making your employment package more competitive in the labor market, and can also be key in retaining the top talent that you do have. These business protection policies play a critical role in mitigating financial risks and ensuring the continued success and stability of a business in the face of unforeseen events. As I said, we don't have the crystal ball. We can't predict what will happen around the bend. So putting these insurance policies in place is paramount of importance when it comes to living our day-to-day lives. Any questions? We got to the end of it. I see Jess has been asking for questions. Jess is rejoining.
It doesn't look like we've got any questions at the moment. Someone might be just popping one in. In the meantime, just to let you know that we will have another webinar in December. It'll be our final one of the year. We'll have Kat with us. Obviously, we'll send out the invitations for that one as well. But if there are no further questions, I can pop the survey up. As mentioned, if anyone has got just a bit of time to leave the feedback, we would greatly appreciate it. And as usual, we will send out the slides and the recording to anyone who has signed up for the webinar. We do aim to get them out within 24 hours of the actual presentation. So just keep an eye out on your inboxes for that.
Sorry, Jess. Last thing I'll say is just that if you want to just pop a question over to me directly, then you've got my contact details on screen. More than happy to go back to you directly on that.
Lovely. All right. Thank you, everyone, and we will see you next time.
Thanks, guys.